Good evening, everyone. Welcome back. It's SM here. I'm gonna be your friend, your host, your brother. Everything that symbolizes love and unity. Alright. So I did a video before. It was flagged. Yep. YouTube flagged it for copyright. They said the song I used on the background. Yep. Alright. So and I already delete the original file. So I just have to like come up again and somehow I'm happy. No, so yeah, now I can have full chance to say what I wanted to say. All right, so so let's just quickly begin. Let's just quickly begin. Like what I was saying in the previous video, I told you guys that you have to know that your first job as a trader is to first of all understand bias, which is what we are talking about in this particular video. Understand bias, then before coming to entry, because this one is equals to 70%. This is just 30. So the moment you are wrong on your bias, you are already 70% wrong in your trade. I don't know if you are getting me. You're already 70% wrong in your trade, alright? And the moment you are right with your bias, you're already 70% right with your trade. The only problem you will have is entry. The only problem you have is entry, maybe entering late or entry too early. That's the problem you will only have. So but before talking about entries, you have to deal with your bias first, alright? So that's where this comes in, alright? So when building your bias, there are key things that you should consider when building your bias now. I didn't say this in the previous video, but let me just use this opportunity. There are few things you should consider when building your bias. First of all is to understand the market trend. Are we trading upwards or we are trading downward? Trading downward. So you need to understand the market trend first. Understand which trend are we on, bullish trend or a bearish trend. Sorry, a bullish trend or a bearish trend. So that you can know which direction you are building your bias to. See, when building bias, this thing is also important, your trend, knowing the trend of the market. Alright. So now looking at this, let's say, and now I want to point out something for you. When building your bias, it should always be 3 time frame. Alright. So when coming into the chart, let's say I'm coming into a new pair like this Solana USDT, coming into a new pair, I am starting from the monthly time frame, and it is always three. Are you getting what I'm saying? Monthly, weekly, daily. If I'm starting from the weekly time frame, at every new week, weekly, daily, 4 hours. If I'm starting from the daily time frame, building my daily bias every new day, it should be daily, 4 hours, 1 hour. Are you getting me? So it should always be like this. At the end of every month, you go to the monthly time frame, build your bias, start building your bias from monthly, weekly, daily. Every new week, weekly, daily, 4 hours. Every new day, daily 4 hours, 1 hour, or 1 hour, 2 hours. You can use anyone there. All right. So that's just what I wanted to say quickly. So now let's take for example, we are trying to build a weekly bias. We are trying to build a weekly bias. Now, this is a V-shaped key level on the weekly time frame. Now look at where this thing is now important. Now, having knowing your whatever will I call it, like your trend. All right. So now, what was the most recent breakout? The most recent breakout was this breakout on the, what's the name of this pair now? Sorry, on the weekly time frame. Now we have a V-shaped key level. We have a V-shaped key level. So the first criteria that comes when it comes to building bias is, first of all, there are two ways you build your bias now. Two ways you build your bias, or I can say three. three ways you build your bias, but we are just talking about two. We're talking about building your bias using key levels and building your bias using liquidity. There's another one, building your bias using most recent breakout. Are you getting what I'm saying? Using the most recent breakout. So that we are not talking about that one. We're just talking about two. And we'll be talking about one in this first video. We'll be talking about the other one in the second video. All right. I'll be doing another video, storyline part 2. Then we'll be talking about liquidity. All right. So now look at this. Look at this now. Your first criteria is, hope you know, for a V-shaped key level, what are we basically expecting? We're expecting price to rally back to that key level and then start selling, continuing the trend. All right, so now look at this. So first criteria for the daily, from the time frame you are building on bias from, let's say for example this is a weekly time frame, we are expecting a push, price coming into that key level, reject and close below, reject and close below. That's the first criteria. Price should enter that key level, we should reject, and then candle closure is also very important. Let me change this color of this thing. I need to change the color. Let me put it on green. Sorry, make it brighter. Yeah, let's leave it like this. All right, rejection and a close below. This is the first criteria now on the weekly time frame. On the weekly time frame, so this is the weekly because we are building from weekly now. So coming into the daily, and let me say it again. I said it in the previous video, but let me say it again. In the time frame you are building your bias, a time frame lower from that time frame should always confirm it. And you get what I'm saying? Should always confirm it. Now look at what I'm trying to say. On the weekly, on the after this has happened, sorry, my god. After this has happened, after this has happened on the weekly, on the daily time frame, we want to see price gives us a sweep of liquidity, and a break of structure, more like a Quasimodo setup. All right, so a sweep of liquidity and a break of structure, then, or it should give us a most recent breakout. These are the two things we want to see on the daily time frame. It's either we see a sweep of liquidity at that level, a sweep of liquidity and a breakout and a break of structure. You have to wait for the candle to close. That's the thing. Patience is what is going to save you most of the time. So you have to wait for the candle to close. When you're coming from the weekly, now meaning that you have to wait for that weekly candle to close, because price can reject a level, price can be rejecting a level and still come back to fill up that rejection again. So candle closure is very important. So we want to see this on the daily time frame, or we see this on the daily time frame, a most recent breakout. So now this alone confirms our daily bias. It confirms our daily bias. So when we are coming from the daily, when we are coming from the daily, when we are coming from the daily, you your target should be at least the monthly key levels. Are you get what I'm saying? Your target should be at least the monthly key levels. When we are coming from the weekly, sorry, when we are coming from the weekly, we are targeting your monthly key levels, your opposing monthly key levels. When you are coming from the sorry, when you are coming from the daily, you are targeting your weekly key levels and stuff like that. All right, so now daily give us a sweep of liquidity and a break of structure. Sweep of liquidity and a break of structure, or gives us a most recent breakout. So we drop to the 4 hours time frame. Dropping to the 4 hours time frame, we want to see a most recent breakout on the 4 hours time frame. We want to see a most recent breakout on the 4 hours time frame. This is a breakout right here. A most recent breakout on the 4 hours time frame. Now, why are we doing this? Because we want to make sure that all the time frame are in alignment. All the time frame are in alignment. All right. So this is basically what you need, more like a textbook setup of what you need to build your bias. So you can also go and study it. I will show you, go into the chart and we'll now be looking for them, how to spot them, how to build it and stuff like that. All right. So that's basically it. All right. So at the same time, if all these things are not present, if it's not arranged like this, there's every probability that price will go against you. It means that the time frame are not in alignment. Let's say for an example, 4 hours daily is giving us this. Instead of 4 hours to give us a most recent breakout on the to the downside, we are seeing something like this on the 4 hours. It means that the time frame are now in alignment. So what you need to do at that very time, you should wait until price flips downward again. Are you getting what I'm saying now? So also for a bullish scenario, the same thing happened. A bullish scenario, the same thing happened. Price tap into that key level on the weekly, reject and close above. Daily give us a sweep of liquidity and a breakout and a break of structure, or a most recent breakout. Then 4 hours should give us the same thing. Are you getting what I'm saying now? So now let's go into the chart. Is which pair am I using? Let me use this. Let me use BTC USD. Yes, BTC USD. Let's use BTC USD, I think. So now weekly. Video bias from the weekly. Let me remove this thing. Remove all drawings. Video bias from the weekly. Now look at what happened. Look at what happened from here. Before all this rejection started going and everything started going. Now, in fact, let's start from monthly. Now look at what happened. First of all, which trend? What's the market trend? We have a sorry guys. We have a break of structure, more like a breakout here, and not just that, there was a sweep of liquidity, and also a breakout. Okay, now where was price reacting from? There are three key levels here. We have this breakout key level, we have this apex key level, and then this Quasimodo key level here, Quasimodo level here. So price taps into that Quasimodo level, rejected and close above. Now look at what I'm trying to say. That's the first criteria, right? A rejection and a closure, bodily closure upwards, because we are going upward. But look at what happened on the 4 hours, on the daily time frame. Sorry, on the weekly time frame. There was no breakout to the upside. And because there's no breakout to the upside, this time frame did not really confirm what this particular time frame was doing. But when you are looking at this time frame, where was the breakout? Go to the week, go to the monthly again. Go to the monthly breakout. Sorry. So apart from this particular breakout up here, there was no most recent breakout around this level. So let's go back to the weekly now. So now weekly tapped into that key level, but there was no most recent breakout for us. There was no most recent breakout. There was no confirmation. Weekly did not confirm what monthly was doing. So that was why you see this move pushed in, and that price is still rejecting again until weekly give us a confirmation, more like a break of structure or a breakout. We have not really gotten our story yet. All right. So let me see. Let me look for a pair that has that confirmation I'm talking about. Sorry guys, sorry for this disturb. Let me look for okay that has what I'm talking about, right? Let me use this pair for an example. Let me use this. So now this was a weekly key level. Let's go to the monthly. Now look at what happened. Look at what happened. Monthly reject monthly key level. Yeah, that's the level I will use now. Monthly tapped into monthly key level, rejected and closed above. This was the monthly candle. This was the monthly candle. This particular one. Tapped in, closed above it, closed above it, closed above it. What's the next thing? We drop to the next time frame. The next time frame should give us a confirmation. So coming into the next time frame, coming into the next time frame. Sorry guys, I don't know. Let's use this now. Let's use this now. Coming into the coming into the next time frame, there was no breakout to the upside. Are you getting me? There's no breakout to the upside from the weekly time frame. Although price is currently giving a breakout, price is currently giving its breakout, but there was no breakout to the upside. Okay, there was no breakout to the upside, and this was what I was doing. So I was playing it from a weekly level now. I was playing it weekly now. So now this was the week, tapped into the key level, tapped into this key level. Or I'm coming, let me look for this a clear key level that price tapped into. Yeah, this was it. Price tapped into this key level, closed above, closed above it. This was it. So now we are waiting for daily to confirm what 4 hours, what day for weekly did. And for daily to confirm that, we need to see a breakout on the daily time frame. Now look at what happened. Go to the line chart. You can see this was where the breakout happened. I told you two things you are going to see, either a most recent breakout or a sweep of liquidity and a break of structure. So what happened here was a most recent breakout. So this most recent breakout confirmed bullishness, and then confirming bullishness, there was no pricing came back to this level. Price did not came back to this level. So what we do, you drop down to the 4 hours to look for another most recent breakout again in that direction. In that direction. And where was the most recent breakout? It was this particular level. This was the level. This particular breakout to the upside. This was the particular breakout to the upside. But guess what? Price did not come back to that level as well. Although this was where price used. This was where price used this level. That was where price reacted from before it started buying. So let's go back to the weekly. Let's treat new week. That last week, what happened that last no sorry, this week that is about to end. Alright. So now look at this. Last week, we can say that last week tapped into this particular V-shaped key level that was disrespected. Now, this was how I built this bias. There was a trade here on this USD I'm just trying to explain it a little. Now, price tapped into that key level and closed, tapped into the key level, closed above. First criteria, tap, reject and close above. Now go to the daily time frame. We want to see a breakout on the daily time frame. Now where was the touch? Now this was the touch, and where was the breakout? This was where the breakout was. This was where the breakout was. But guess what? Price did not come back into that level. See, some breakouts are going to come with entry. There are some that will not come with entry. That's the thing. It's a fact that you have to accept. You get what I'm saying? So now go to the 4 hours time frame to look for a most recent breakout again in that direction. Where was the most recent breakout on the 4 hours? This was it. This was the most recent breakout on the 4 hours. And where did price came back to? Price came back to use this. You can say it used this Quasimodo level. This was particular Quasimodo level. Why? Because it was a sweep of liquidity and a break of structure. So price came back to that Quasimodo level. I'm not teaching entries. Price came back to that Quasimodo level, and then price started buying from there. Price started buying from there. All right. So just like that, price started going, gave a breakout again. Price came back to that breakout level, reacted from it, reacting from it, gave another breakout, and price just continued going upward. Let me look for another pair. Let me use this oil. There was a trade that was, yeah, this was it. This particular move, this move, it was an amazing move. All right, so let's just run ourselves through. Go to the monthly time frame. What did February did? February. Now look what February did. February tapped into a key level. First of all, we have to tell where what's our trend, market trend. What's the market trend? All right. So first of all, you can see that there was an external break of structure to the upside from this level. Then this serving as internal range liquidity. Price took out the internal range liquidity and then triggered from a monthly key level below this level. Let me just mark out the level. This was it. That was where it triggered from. So now, triggered from that level, I don't want to like go through what happened in January. That's not what I'm going through. Let's deal with this price action, this monthly price action, this new month. So now look at what February did. February tapped into a key level, closed above. Go to the weekly time frame. On the weekly time frame, what can you see? You can see a breakout, a most recent breakout, on the weekly time frame, confirming bullishness. Are you getting me? Confirming bullishness. Now, price has come into that most recent breakout. This was the level. This is it. Now, price has come into that level on the weekly time frame. So inside of this level, we are waiting to see our daily breakout to the upside inside of this level, this particular level now. This particular level. So you go to the daily time frame. Coming into the daily time frame, where was the breakout? So sorry. Yep, that's it. Where was the breakout? There was a breakout to the upside again. There was a breakout to the upside again. But guess what? Price did not tap that key level. Price did not tap that key level. Alright, so but this was the key level that I was talking about. I was playing it from daily. I think no, it was 4 hours. Sorry. Yep, that was it. This was the level. This was the level. Now, how did I play it like this? It was because I was starting from the weekly time frame. Now, because clearly this was like a new week, right? Monday tapped into, okay, this is weekly now. Previous last 2 weeks tapped into this weekly key level, rejected and closed above with a breakout. All right, so that was it. Daily time frame. Daily time frame now gave most recent breakout to the upside. Most recent breakout to the upside. This was the most recent breakout to the upside. Now I had a lot of misentry of this trade. Now going to the 4 hours, because price did not come back to that level. Going to the 4 hours, where was the 4 hours most recent breakout? 4 hours most recent breakout was this particular one. Go to the line chart. This was 4 hours most recent breakout. This was 4 hours most recent breakout. And inside of this most recent breakout, you have this, that at the entries you have this A shape key level and this V shape key level. Those are the entry point that you have. Alright, so where do you see that price reacted from? Price came to this key level. So from here you can play it, but if you want to stay safe, you can still wait. Now waiting, you can see that price give another breakout. Price give another breakout, then came back into this key level again and continue the move. You can see the move went up to the upside just like that. Just like that. Let me look for another example. Let me use this pair. S&P 500. Let me use this pair. Sorry. This was the pair I used. So let me just run you through the bias on this particular one. Now on the weekly time frame, first of all we said we want to see a rejection and a close below. This was last week. Price tapped into this key level, rejected and closed below. First criteria was met. Then you go to the daily time frame. We said we want to see a breakout on the daily time frame. Now look at this. Where was the breakout? Go to the line chart. This was where the breakout was. This was it. This was the most recent breakout. And I told you that you have two entries, one and this other one as entry. I don't know if you are getting me, as entry. So now look at what price did. Price now tapped into that key level. When price tapped into that key level, say we want to see price do two things. We want price to give 4 hours to give us the same thing again, breakout to the downside, because we are bearish, right? Go to the line chart. Where was the breakout? The breakout was down. This particular bearish breakout, this was it. That was the breakout to the downside. All right, but price did not come back to that level. Okay, price did not come back. Then there was this breakout also, this particular breakout, but price came into this particular breakout, this particular one. Sometimes the entry can be around here, or sometimes you can even find the entry inside of this place. All right, inside of this place. Okay, so price now came into this key level, so from here now I went to the 1 hour time frame, which I'm not teaching entry, so I have no business telling you how I did it. All right, so just that was how I played it. My target was this level, this particular level. That was where the target was. Entry was like this, target was like this. So it was smooth, quite smooth. All right, just like this, and like this. All right, so that's just basically when we're talking on the next video, the next way we build our bias, we're going to be diving deep, a little deep. All right, so this one is more like just an introduction, but you can go and study it. You get what I'm saying? Basically, what you want to see is, we want to see weekly. Let's say you are building from weekly. Understand the trend first. Trend is bearish. Weekly come into this key level on the daily. You want to see this on the daily time frame. Breakout. Then price comes into this breakout. Coming into this breakout, we want to see the same thing on the 4 hours time frame. Then from here, you cannot be playing your entries from and just be continuing the trend. That's just it. Alright, so have a nice day.